that's a big red flag. You're going to see things like gold go from 3,000 to 7,000 to 20,000. And you're going to see Bitcoin go from 100,000 to 1 million. It's not funny anymore. We used to laugh about the world becoming the Hunger Games. We don't really have the right tools to deal with a massive recession in the United States without sparking a global depression. They will print to avoid that. And that could really destabilize confidence in the US dollar. This is when you want to buy it. I can see a world where Bitcoin can go from a $2 trillion asset to a $20 trillion asset, to a $50, $100 trillion asset, $200 trillion in the 20.
Let's do a download on what's actually happening. What the hell's happening in the world, James?
Yeah, I mean, look, it's no secret that all eyes are on the Fed right now, right? You can see it in the markets. Every single time we get some sort of economic indicator, it's like the Fed funds futures rip all over the place. And this morning we got a pretty negative, it's a sloppy employment report, so with a 4.3% rising unemployment, it hasn't really spiked yet, but we're in that strange period here, Brandon, where bad news is good news for the market in a way, because as long as it's not devastating, as long as it's not catastrophic, then what the market is looking for is, okay, a little bit of a softer landing from the Fed, meaning they're going to start lowering rates, maybe back off of the rest of that QT that they're doing. It's not much right now. We can talk about that in a minute, but and get some rate cuts here. We haven't had cuts since last year, since before the election, when they cut them 50 basis points right away, and it was like, okay, was that political or not? So you've got some arguments going on around whether or not they should have already been cutting. You've got inflation numbers that they're complex. Some of them are contradicting each other, and the reason for that is tariffs, and there's no way around it. That has had an impact on pricing. It's just a question of how much and how long is it? Is it a structural change? Is it a one-time change? Does it have knock-on effects? Which I think it does have knock-on effects. It's just the question is how much. How much does that ripple through the economy? So, but at the same time, you've got consumers are getting a little bit more stressed, especially the lower demographic, the ones who are taking on credit, using credit cards. You're seeing delinquencies go up. You're seeing 90-day delinquencies rise into a point of, right now they're 12.3%. And at the peak of the great financial crisis, it was only at 13.1%. So consumers are stressed. And especially the ones who are just feeling that pinch of inflation, who have felt it all these years. If, for your listeners, if you, your dollar in 2025 lost 25% of its purchasing power over the last 5 years since COVID. And so, people are feeling that, the lower demographic. Why do we keep saying that? Well, the wages are not keeping up to the inflation, and if they are, they're lagging. So you've lost all this purchasing power all on the way. You haven't been putting away money. You're just trying to catch up. Insurance rates are going up. Real estate rents, whether it's auto insurance, it's medical insurance. I'm sure you felt it. I opened up my auto insurance the other day, and they literally were trying to double it in a year, just double it. And which was already at an insane rate. And I have a perfect driving record. I haven't gotten speeding tickets or anything in 7 years, maybe. I mean, nothing. And I'm a really clean driver. And they just wanted to just double the rates just because they can, And so I had to switch providers. And that's what they all know that you do that. And they push on that, and they make it, they want to create some friction to keep you from doing that. But, and that is, you've got to change your insurance. You got to go and do it and decide which one and give them all the information and fill it out. It's a pain in the ass, but it's worth it, clearly, for thousands and thousands of dollars a year. It's clearly worth it. So, but that whole big picture is, okay, so what are we looking at? Well, it's been quiet. the market's been really quiet, although it's been marching higher. Brandon, we've been in the doldrums of summer for months now. You can see it in the all the just how much trading there's going on. How when you look at the markets, you look at Bitcoin, there's just not a lot of volume, and so now you say, okay, well, what happens if the Fed does cut rates? What if they don't cut rates? What's that argument? Well, the problem is that inflation has been sticky above 2% for a long time. I know true inflation just showed a measure it's below 2% now, 1.9%. But it has been sticky for what the Fed is looking at, the PCE and the CPI numbers. They've been sticking above 2.3, 2.5, 2.6% for a while now. And so the issue here is, if we do have a slowing economy, if we did take out, hundreds of thousands of jobs from the government more, which was the largest hiring employer for the last 4 years, if we did do that, and if AI is causing the younger college graduates not, if it's taking away some of their jobs because AI can do menial tasks now, and they're not filling those jobs with the young, eager employees. If the economy really is slowing, and you've got companies that are slowing their spending, they're slowing their investment into their companies and into new product lines or expanding product lines or whatever, because of worries about the economy, worry about tariffs, then we do have an economy that's rolling over. It worries me. It does concern me. I guess concern is the operative word here. However, you still have inflation that's sticky, and so that is the pure definition of stagflation, where you've got the economy's rolling over, yet prices are still going up. It's an absolute nightmare for the Fed, because what do they do? And that's why they've been sitting on the fence for so long, whether or not it's political. Their argument is that they're data dependent. And the data has been showing that inflation was not conquered yet, and employment was still okay. So their two mandates are stable prices, which is their target of 2% inflation, and full employment. Well, full employment, nobody knows what that means. It's like, are we at full employment or not? But if unemployment is rising, we're clearly not in full employment. But over the last number of months, they've been able to argue that, hey, we're at near full employment or close enough, and inflation is still something we're concerned about. So we're not going to lower rates quite yet. And because of that, the market has a bunch of uncertainty in it, and you see this grinding sideways. However, because of that mandate, now they're in a pickle, right? So if they lower rates and it makes liquidity easier access to liquidity, then, and I'm looking up at my Bloomberg screen now, and I'll quote the numbers in a second here, but if they lower rates, what happens to inflation? Does inflation rip? And, is the economy rolling over hard enough that they should be lowering rates and easing access to capital for companies to be able to access capital to keep the employment from driving into a recession? That's the problem. So the issue that the investors know is that the Fed is usually late. They're usually late, almost always late to the party. And they are because they said they are. They expect to be. Powell has said this a number of times. He has said, look, we're data dependent. We know the data is lagging. And by definition, the Fed is then lagging, because the Fed is lagging the data. So even when they get the data, unless they have an emergency meeting, they're still waiting weeks or sometimes months to make a decision on rates or on quantitative easing or quantitative tightening at their next meeting behind that data. And so why is he comfortable with this? Well, he's comfortable with it because the more problematic situation is when they make liquidity too easy. They print too much money. They flood the market with capital, which is what we saw in 2021 and 2022 when inflation ripped over 9%. Man, they had to scramble and raise rates at a breakneck speed in order to battle that, and buy back bonds with QT to take liquidity back out of the system. It was a nightmare for them. The reverse repo got up into the trillions, and it just became a nightmare for them.
The world is changing. Privacy, sovereignty, and freedom are no longer optional. They are essential. If you are still holding your Bitcoin on an exchange, you are vulnerable to your Bitcoin being frozen or the Bitcoin not even being there. In a world of broken trust, a fallen world, we need to be able to know through code, through math, that we have the keys to our wealth. We don't need to trust some third party. We don't need to trust some government. We don't need to trust some ruler on high that they're going to have our wealth and not censor it from us. Just ask European Union how that's going right now. And that's why at Foundation, they're building Bitcoin tools that are open source, privacy first, and actually simple to use. It's the only kind of Bitcoin crypto tools you should be using. The Passport Core is a Bitcoin-only hardware wallet, probably made in the USA. The only one that I know of, fully air-gapped, no Wi-Fi or Bluetooth to compromise your keys, with a large screen, seamless QR workflows, and encrypted micro SD backups. It is here for the average person or the advanced cryptographer as well. Along with your purchase, you get the attachments, the USB-C cord, the iOS and Android attachments, micro SD card, and the USB-C cable. You don't have to go searching around for everything. You also get the free Envoy mobile app as well. You can buy Bitcoin straight into your self-custody. It helps you set up your Passport Core, label and track your coins, manage your keys, and do so much more. Foundation built the core and their company for sovereignty and freedom for all of humanity. You can take back control of your money and your digital life now. Get started today at foundation.xyz/Brandon, foundation.xyz/BRANDON, or check the link in the description.
So that's gone now. There's no reverse repo, which is excess capital looking for just easy return, an easy yield, which they put at the Fed. These banks have tons of excess capital, but that's gone now. That excess capital is gone. The bank reserves are still plentiful according to the amount of liquidity we need for the driving of the GDP, the driving of the economy. So that's okay. But you still have this inflation question. So the issue here is that it's easier that's a hard thing to deal with. It got out of control, and you saw it, and you saw prices rip through the roof. The easier thing for them to do is to let the economy roll over a little bit and then turn around and hit it with another injection of liquidity. And he has said that. He said, we have tools to deal with this. We have tools to deal with a surprise slowdown. We don't really have the right tools to deal with an explosion in inflation. And we saw it happen. It's really hard train to stop, which gets us back to Lynn Alden's meme, which is nothing stops this train, which is, yeah, you're seeing the market kind of sniff it out. And that's why gold is ripping to new highs. Why? Two reasons. A loss in confidence in treasuries as a store of value because of the debasement of the US dollar. And so there's an issue here. The issue is and the two reasons are, you've got loss of trust in Congress / the Treasury, meaning Congress is just spending too much money. We're running fiscal deficits of over $2 trillion a year, regardless of what Doge did. It's relentless. And because of that, investors are worried about the Treasury having to switch eventually from short-term treasuries, these T-bills, which are anywhere from overnight to just a few weeks or a few months in maturity, into long bonds, which are the 7-year, 10-year, 20-year, and 30-year bonds. And when they do that, they'll have a lot of bonds that come to market. Who's going to buy them all? And that's an issue. That's a concern. So now you're seeing rate premiums go higher, meaning that's the premium that investors demand above the expected yield of a bond. And then they're also worried about inflation, because they know that the Fed's going to have to print money, and they're going to have to flood the market again to keep the engine going and debase the dollar to keep debt from exploding from 37 trillion to 50 trillion overnight. And that's the big issue here is the market knows that the Fed is going to have to print. Nothing stops this train, and that the dollar is going to debase. And now you've got gold ripping in new highs, and that leads us to Bitcoin. But I'll pause there. That was a minor long rift.
No, that's perfect. We love our James riff. It's wild because I don't know. I mean, the guys I started watching 15 years ago, you know, the Harry Dents, the Mike Maloney's, you know, the Robert Kiyosaki's. I mean, this guy's been calling for, you know, a crash for years, right? And with good reason, you know, like there was not no reason for that. And like you said, I mean, like Lynn always says, there's nothing stops this train. I mean, how do they keep papering over everything? I mean, at what point does reality snap back? I mean, like, how do you have a crash in 1929, a crash in '09? Like, what are these moments that spur on all of a sudden? Like, is there any rhyme or reason for what happens at any given time? Is it just kind of like fluke things that just like this thing springs a leak and it just blows up all of a sudden? And I don't know, because like what if right now it just seems like, yeah, like forever it's just going to be this constant printing, papering over things. It will be at 100 trillion in debt in like 10 years, 15, 20 years. I'm like, oh, okay, whatever, you know, give some UBI, do whatever. It just feels like it just doesn't end. It just, there's no correction.
Well, it doesn't.
No,
And that's and you're correct there. So the fear is that you have some sort of black swan event, whether it's a credit event or some sort of you know, catastrophic natural disaster, or like massive earthquake, or you know, man-made virus spread across the entire universe. Who knows? But whatever it may be, you know, the market doesn't know how to handicap that. It's just uncertainty. It's just a level of uncertainty. But the market right now has been very, very quiet and confident. And you could see it in the VIX. The VIX has dropped all the way down to, I mean, today it's at let's see here. The volatility index. Yeah, it's at 15.7. I mean, you know, historically, getting around these levels is a very, very, very complacent level. And so it means that the market is comfortable with the risks. You know, it's not down to 10, but it's pretty comfortable. And so for some context, it was down around, you know, somewhere around 12 to 14 right before the great financial crisis. And then it spiked all the way up to the 40s. It spiked up into the 50s and during the COVID lockdowns. But this volatility index shows you the amount of put and call buying that expects big market moves. And so when it's very, very low like this, it just means it's complacent. Now, part of that, Brandon, is that we are in the depth. We're still just coming out of the depth of the summer. September and October is typically when fireworks happen in the markets. Why is that? Well, you've had the entire summer of people who are working age, who have kids, who are off for the summer, and they're on vacations, and they're just doing their thing. They're taking some. I mean, half of Europe takes off in August, and that's not a joke. It's reality. They literally have it's a system for them that they have backup systems where you have to leave the office for weeks at a time to be sure that your backup can do your job. It's kind of you know, I don't know why we don't do more of that here in the United States, but you know, it's quiet. And then you look at the Bitcoin charts and you see that it's been grinding. It was grinding from end of May into beginning of July from 100 to 110. And then it broke that level and went up to 120. And then it's been grinding between 110 and 120 since July. And so it's just been in these ranges, but it's also been on very low volume. You know, you see these moves, but they've been staying in this range. And that just tells me that there's some uncertainty out there. It's just a sideways grind. People are watching the Fed to see if there's going to be more liquidity soon or not. And Bitcoin is the fuel for Bitcoin is liquidity. I mean, there's just no way around it. that it's soaking up liquidity as there's more and more of it comes into the market. That plus, as it does expand its knowledge base, as more and more people understand it better, it is growing as an asset class too. So it's taking market share away from other assets like gold. I mean, gold would likely be far higher now if it weren't for Bitcoin. I mean, Bitcoin's got $2 trillion in it. Some of that is risk. Some of that is risk capital, as we know, we've seen the markets, but some of it is long-term store of value capital. So as Bitcoin continues to grow, it's going to continue to take market share away from gold. But I'm not worried about it. I am mildly concerned about the complacency in the market, but that allows people like me who are managing hedge funds to layer on some risk mitigating positions. Like it's cheap to buy some insurance here. And this is when you want to buy it. You don't want to buy flood insurance when the water's creeping up to your windows. You want to buy it when it's nowhere near. It's not even in your yard yet. And that's where we are right now. It's kind of nowhere near. Credit spreads are low. The VIX is very low. It's just you're seeing a lot of conflicting data coming out of the economy. So nothing is really telling us that it's one way or the other. Absolutely. But there's enough data for the Fed to back off a little bit, which is a net positive for the markets. That's why you're seeing the markets continue higher. It's just reality. And that's kind of the way it's going to be for a while. I mean, the S&P's down mildly today, but I mean, it's been knocking against all-time highs for quite a while here. So, there's no surprise to me in that. Now we just wait. We wait to see what the Fed does. We wait to see what the next two inflation prints are. And the Fed's going to be meeting here in September, and you've got, as of today, over 100% probability that the Fed's going to cut rates on September 17th. And you've got basically a 93 to 95% probability that they're going to cut twice by the end of the year. And that's what the market is betting now. And that's a positive for Bitcoin, as long as it's not because of an emergency rate cut that you've got some sort of market event. And that's kind of where we're at. Look, I mean, then just looking at Bitcoin in itself, and that's a big question, is now it's been grinding sideways. You've got you've got this question, well, what's been happening? Who's been selling it? Who has been selling this thing? And look, a lot of OGs have been rotating out, and I'm not blaming them. Look, if you've held on to Bitcoin from $100 or $1,000 and you're now sitting on hundreds of millions, or some people are sitting on billions of dollars, go fund your lifestyle. That's fine. Whatever. It's not a big deal. Just put the coins back into other people's hands and go fund your lifestyle. Go buy land or, jets or yachts or whatever you want to do.
Yeah.
Some of them have in the beginning of the summer in particular were migrating out of Bitcoin and into some of the Bitcoin treasury companies. We saw some of that happen. And so I think less of that is happening right now today, but it's more of just look, ring the register. This thing's been over $100,000 for over 100 days. I'm ringing the register. I'm going to get some of the stuff I want, just in case we're getting to the end of this cycle. I'm going to go monetize this one. Okay. And so you saw a spike in that long-term holding over short-term holders, that spike in the liquidity from that comes from that. So, and long-term holders were the sellers. So that's one thing. But going back to the question of what happens if we do get a slowdown, if we do get an event, well, it depends on what the event is. Like I said, if the event is you're just getting a strong drawdown because of recession or some sort of natural disaster that that impacts an economy greatly, then, or you get something like war or something like that, whatever it is, an attack or a terrorist attack or whatever it may be, black swan events are typically super negative for markets, at least in the very short term. And the reason for that is that, people get scared. They want to move into things that are less risky, lower risk. And typically that's been U.S. Treasuries and gold. Now we've seen gold marching higher. And we talked about the reasons for that.
Yeah.
And just structurally, you've got countries and central banks that are buying gold instead of U.S. Treasuries. Oh, that's a big red flag. Big red flag that people are absolutely ignoring right now. This is something that we should be paying attention to. And so if you're wondering, and we can talk about the stablecoin bill in a minute, but that there's a reason for that. But going back to Bitcoin in particular, and if you do have a steep drawdown in the markets, then everything correlates to one. And you get to this point where portfolio managers sell what they can, not what they want to. And because even if they know, they walk into their office on Monday morning, there's been an event over the weekend, and they're just like, sell 10 or 20% of everything. Just get out of it. Like I need liquidity. Why do they do that? They do that because they know that everybody else is doing the same thing. It's a rush to the exits. And so they're trying to get liquidity before they get margin calls. So what happens in these events is that your prime broker changes the margin on your portfolio. These hedge funds are not running on Reg T. They're running on portfolio margining. And those portfolio margin, those levels are different for every bank and every investor, every hedge fund. And so you could be in a position where you've got haircuts of just 5 or 6 or 7% on your portfolio on average, which is the amount that you have to put down to borrow the rest. Well, do the math. You're talking about anywhere between 15-20% leverage, and you suddenly walk in, and because of the market events, because of volatility, that risk desk at the prime broker changes the availability of your margin. So they say no longer is it 6 or 7%. Now you have to put down 20 or 25%. Well, man, you've got to raise a lot of money fast to get to that. And you don't want to be in the position to in a fire sale where you're just selling all these positions at terrible prices because you're getting a margin call and you need liquidity, you need cash. So unless you're sitting on T-bills, you have a problem. And most hedge funds are not sitting on T-bills. And so they sell what they can. Well, what's the one thing they can sell over the weekend, Brandon? The one thing that's trading 24/7, 365, without a doubt, it's Bitcoin. That's why you see sometimes in uncertain periods where Bitcoin has this big crash on a Sunday, because people are like, oh God, I need some capital just in case. That's typical. So everything correlates to one. Doesn't even matter if it's gold. Gold went down momentarily during the the COVID lockdown.
2020.
Yeah. Yeah, because it was just, you gotta have cash, you gotta have capital. So now, that being said, what happened to gold when the Fed started printing? It became clear the Fed it ripped. Well, what happened to Bitcoin? Same thing. Now, on the flip side, there is an instance that I can point to recently that Bitcoin actually rallied into the face of a crisis, and that was Silicon Valley Bank collapse. So when that happened, you had depositors, consumers who were suddenly concerned that, oh my God, what if my bank collapses? I'm over here at not me, but if you had some people saying, I'm over here at the, my local bank, my regional bank. It might be a bank that's not even national. It's just a small regional bank. and, Nevada State Bank or something like that. And they're like, what happens if they can't meet the FDIC payout requirements and then they take my capital? Because we've seen it happen before. You saw it happen in Greece, where they seized depositors' capital to pay the investors in Greek national banks. So that scared people. They that was kind of a test case, and that set the stage for the EU to do that. Could they do it in the U.S.? Technically, they can, and that's the scare. So if you have more than your $250,000 in your deposits that are not protected, then you could lose out on that. So what happened? People took their money out of the banks and started buying what? Bitcoin. Bitcoin rallied somewhere around 25 or 30% in the next month or two off of that, because there was a scare. There was a worry that, God, I don't want to hold these electronic US dollars. I'd rather have something they can't touch. It's in a completely different system. It's run on nodes across the world that the banks don't have access to. So I want my money there. And that's what you saw happen. So it's hard to tell where it is.
Everything you are learning in this episode is completely moot and does not matter. If you hold Bitcoin and are still leaving it on an exchange or sharing keys and your KYC information with a third party, this is your wake-up call now. You are only self-sovereign if you alone hold the keys to your wealth. 100% self-custody sounds daunting at first. Believe me, I lost 2 years of massive gains over a decade ago because I was worried about taking the few minutes it took to understand self-custody. And that's exactly why you need to talk to my friends, Tony Yazbek and his team at the Bitcoin Way. We just interviewed Tony recently, has over 80,000 views, an overwhelming response. People love his story and the simplicity he shares of how easy it is to custody and take ownership of the greatest money we've ever seen. They'll train you to do it right the first time. Head on over to thebitcoinway.com/Brandon to schedule a free 30-minute consultation today. Their 5-star rated service is exactly what you need. Quit sitting on your hands like I did and get started today. Again, that's thebitcoinway.com/BRANDON. Now that you have the professional team in place, you need the professional tools to store your generational wealth forever on a titanium C plate. Your 12 to 24 words are your generational wealth. That is the key for your Bitcoin, no matter where you are in the universe. Go to Stampseed, code Brandon at checkout for 15% off store-wide. This withstands fire, flood, nuclear fallout. We shot hockey pucks this in. Don't become a statistic and put your generational wealth in paper. Go to Stampseed now, code Brandon at checkout for 15% store-wide to secure your generational wealth forever.
Now, your bigger question was, when does it end? When does this whole fiat experiment end? Well, that's what it is. It's a fiat experiment. We got fully off the gold standard in 1971. And you've seen the dollar debase relentlessly since then. And you're seeing in real time, you've got countries who are in central banks who are, they're less confident in the U.S. Treasury as they were before because of the reasons we listed before. Not only that, but we did have a catastrophic mistake, an absolute blunder from the Biden administration when they seized Russian treasuries and kicked them off the SWIFT network, the payment network. That was so monumentally stupid to tell the entire world that if you don't do what we want you to do, we're just going to seize your assets. Well, you just told the world that you're going to seize the assets you need them to buy. We need them. We need China. We need Russia. We need Saudi Arabia to be buying our treasuries, So when people talk about the BRICS, they're not going to be able to make their own currency. They just want to be able to get away from having to hold the treasury because God forbid Brazil, Russia, India, China, and South Africa, God forbid one of them does something that the U.S. doesn't agree with. Well, clearly it made very clear, and the mandate's there that they could seize your treasuries. They could kick you off the SWIFT network. So who the hell wants to own treasuries in that case? You better be a really good and close ally of the United States if you're going to own U.S. treasuries. That's what they signaled to the world. At the time, we're running multi-trillion-dollar deficits and need everybody in the world to buy more and more. I don't know if you noticed, but we've issued another $500 billion of debt in the last 30 days. $500 billion. I don't care if we're filling back up our bank account, and people say, oh, you're just filling up the TGA. So what? It's empty because we used it. It's like borrowing from your credit card to put money in your bank account and say, yeah, but I'm just putting it in my bank account. Yeah, but you're going to spend it, clearly. And you had nothing in your bank account, so you needed to borrow from your credit card to put it there. It's just an asinine, argument. Yeah, of course. They're borrowing more money because they're not making it. We run in deficit, massive deficit. So why are we telling people that, we don't need you to hold our treasuries? We need you to hold our treasuries. We need you to buy them, which gets us back to the stablecoin bill. The whole point of the stablecoin bill is to create avenues for everybody in the world, no matter how big or how small they are, to buy U.S. treasuries. How does that happen? You put money on in a bank or on an exchange, and that exchange doesn't just sit there with U.S. dollars. They put it into something called a stablecoin. The stablecoin it is linked to the US dollar. The most stable coins are, right? So, and what they do is they buy US treasuries and dollars and some other things, but they by and large buy US treasuries and US T-bills, just like a money market, in order to keep that coin linked to the dollar. And so, that's an avenue for anybody to buy US dollars effectively. So it doesn't matter if you're, if you're in a small Asian country, if you're in a small African country, and you have access to banks or exchanges with your phone. All you need is internet, and you can buy a US dollar stable coin with your, with whatever currency that you have. It doesn't matter if it's from Zimbabwe. You can buy that, or Brazil or Venezuela. You can buy US dollars. That's access to US dollars for the world. Of course they want that. As Greg Foss used to like to say, is the US dollar is the cleanest shirt in the dirty laundry pile. It's going to debase slower than everybody else, and it'll swallow some other currency. So of course it's the global reserve currency. People want it. And so it's an avenue for people to effectively buy more treasuries. And it's no surprise then that Tether is one of the largest buyers of US treasuries now, in the top 10 buyers of US treasuries now. And that's only going to grow. And when you have the JP Morgan stablecoin, and the JP Morgan Chase stablecoin, and you've got the Citibank stablecoin, you've got the Wells Fargo stablecoin, and they're all linked to the US dollar, and they're buying US treasuries. That's an avenue to get more people to buy US treasuries. They need that. And that's why the stablecoin bill is so important to Congress. We were up there a little, it was almost a year and a half ago now that I was up in Washington. We were talking to congressmen and senators and their aides about the importance of cryptocurrencies, in particular Bitcoin and stable coins. And they understood. They're like, oh yeah, we get it. We know how important. Tether's been up here. We've talked to them. So they know what they're doing. And that's important. But that's a long way of saying that, look, there are signs that the world is losing confidence in US treasuries. And what happens when you lose confidence in a currency? Well, you have hyperinflation. Yeah. Now, I am not saying that we're going to have hyperinflation US dollar anytime soon. I just don't. I believe the confidence is going to be there for as long as most every other currency, save for maybe the Swiss franc. The confidence in US dollar is very, very, very high. You ask anybody around you, any of your normal friends who are not into Bitcoin, would you rather own Bitcoin or the US dollar? They'd say dollar, hands down, 100 times out of 100, basically 99 times out of 100. So the confidence is there. It takes a long time to break that confidence. And but eventually the math just doesn't work. The math doesn't work. So what happens is you get periods of high inflation, even if you don't have hyperinflation. We're talking about back from the 80s. You're
Yeah.
too young to remember this,
Yeah.
but the 80s were awful. I mean, you're talking about 18% mortgages on your houses. You're talking about 20% inflation, 16% inflation, 17% inflation, 14% inflation, 9% inflation, 17% inflation. It was crazy. You just saw inflation it was nuts. That was driven by, by oil and the conflict in the Middle East, but a little bit different, but very difficult to stop and painful, painful, painful. And so a very high deflation of the dollar, debasement of the dollar quickly. But we've only been on this full fiat standard since 1971, since the Nixon shock took us off the gold standard fully. And so here we are, 50 years in, and we are living the experiment right now. Eventually the debt just gets to be too big and it all collapses on itself. And so the hope, though, is that you've got this avenue with Bitcoin that saves the system from itself and allows the more responsible sovereigns or central banks in the world to start backing some of their securities with something that can't be debased like Bitcoin.
Do you think there's just a long runway for fiat currencies? Like, I mean, I know a lot of Bitcoiners think like, oh, Bitcoin it's going to be the only money someday, hyper Bitcoinization. I mean, do you ever see that realistically happening? And maybe it's 500 years in the future. I don't know, but it feels like governments are going to, you know, are they ever going to give up that ability to print currency? Is Bitcoin just kind of like an accountability measure, kind of checking the system, for a long, long time? And because these fiat currencies have such a long runway, like you said, if central banks get in the game eventually and start backing it and saying, hey, that gives fiat currencies a longer runway in a sense to start doing this. Stablecoins, I mean, all these things that are happening. Like, how do you see that unfolding, I guess, in the coming decades?
Yeah, I mean, I see that I see Bitcoin becoming the ultimate store of value, taking away. You've seen Jesse Meyer's chart of $1 quadrillion dollars worth of assets in the world that are store of value assets, and I see Bitcoin can just continue to take out of each bucket. So far, it's been taking out of that equity and gold bucket primarily, but it will start taking capital from the real estate bucket and then eventually from the bond bucket and becoming the ultimate store of value. And so, and that does extend the runway for particularly the US dollar, I believe. And so, and it can go for a very long time, 20 years, 40 years, 50 years. Larry Lepard thinks that, we're talking 5 or 10 years at most. He and I debate about this. I think that's a little bit early, but you never know. He could be right. He could have just a complete collapse. We could run into a situation that we do have a black swan and we get hit the big print. I do believe there is going to be a big print. The question is how big. What kind of
money?
Is it going to be like a few money bazookas worth of money, or is it going to be a tsunami? I mean, last time we printed over $5 trillion. This time it may be 10 or 15 or 20, who knows?
Yeah.
And that could really destabilize confidence in the US dollar if they did something like that. But what's the choice? You can't have markets collapse. We are so financialized in this country and now across the world because the US stock market is the largest in the world. And, we have the largest economy. Like you can't have a massive recession in the United States without sparking a global recession and global depression. You can't. And they know that. And so they will print to avoid that and just kick the can down the road and say, we'll pay off that debt someday. No, they won't. Of course they won't. It's just the world is lending to itself, to each other. They're just borrowing future productivity and pulling it into the now. They're doing it irresponsibly. You can do it responsibly. You can take on some debt and build a business and pay it back responsibly, but they didn't. They took on way too much debt. Now they're not going to be able to pay it back. And there's that old saying of, if you owe the bank $1 million, it's your problem. But if you owe the bank $100 million, it's the bank's problem. Well, in this case, the United States is the customer, and they owe the world $37.5 trillion, $37.8 trillion. That's the world's problem now. So, they got to keep going. You got to keep lending to them. Got to keep lending to them. Got to keep the engine going. Nobody wants to see the United States collapse. They would be catastrophic. So I do believe that it's going to go on longer. It's going to go on 10 or 20 years at the very least. It could be 20 to 50 years, and Bitcoin could extend that runway quite a bit. And at the same time, take capital out of other buckets of stores of value and go from a $2 trillion asset to a $20 trillion asset to a $100 trillion asset. Now, at that time, who knows what that 1 quadrillion bucket is? Is it 2, 4, 5, 12 quadrillion? But Bitcoin's going to be substantially larger as a percentage of that bucket in the future, in my opinion.
This is just incredibly fascinating. I mean, what are the options? What are the ramifications, I guess? I mean, it just makes me think of so many things for the average working stiff. All of us, the average, none of us are in that elite class, right? Is debt jubilee? There's war. A lot of times there's just war, right? But I don't think there's like a global appetite for that much war, right? Social media and seeing things going around. So is it just this transfer of wealth through those holding the hardest assets and financial repression and governments of the world just spewing currency into the air? And it's basically like, that's the most palatable sorry, if you weren't on the right side of the trade, this is the greatest trade, get in or get out. Like, it all correlates to one, and sorry, you're either lost or not,
Yeah. I mean, look, the message for the listeners is own assets any way you can. Get assets, whether it's real estate or it's, or it's a hard asset like gold or Bitcoin, arts and collectibles, whatever it is, like, own assets. That's number one. And then focus on the ones that are not risk assets if you can. Bitcoin's been a risk asset, but it's moving out of that class slowly, but it is, and evidence of that with Silicon Valley Bank. But that's the most important thing, is you need to own assets, because the assets are not going up in value. The currency that's being traded for those assets, it's going down in value. That's all you need to know. Inflation will continue. It will continue, and it will get worse. They will print more, and they will print a lot. And when they do, you're going to see things like gold go from 3,000 to 7,000 to 10,000, to 20,000. And you're going to see Bitcoin go from 100,000 to 1 million. It's just reality. And because there's a scarcity of them, and people believe in the network. So for those listeners who don't understand Bitcoin and still need to study it, it's a very simple equation. It's run on math. It's governed by a mathematical equation that limits the number of Bitcoin the total number that will ever be created to 21 million. Each of those can be split up into 100 million pieces, Satoshis, which are like pennies. So there's enough of it to go around the world, and there's enough of it to swallow a massive amount, pretty much all of the store value assets in the world, and unlike gold, it's easily transferable. It's immutable, meaning the code can't be changed. If you own the Bitcoin, you have the keys to it. That's it. It can't be changed. It can't be taken from. It can't just be, they can't change their mind and say, oh, I didn't really send that to you. They sent it to you. You have the keys. That's it. It's on the time chain. It doesn't change. It's immutable. And it's backed by 80 terawatt hours of energy use annually, which is the equivalent of 21 full-scale nuclear reactors running 24/7. It's nation state resistant. So it's the strongest, hardest currency out there. And so if you're a gold bug and you don't own Bitcoin, I do not understand. You have not done your homework, and you need to quickly. But That's the message. Somehow find a way to buy assets. And the good news is with something like Bitcoin, you can buy as little as a dollar worth every day, or even less than that. Becomes economically less, less attractive
Feasible,
because you do have to
yeah.
pay some fees to trade on the network. But you can buy as little or as much as you want when you want. Just start buying it regularly, every week, every month, whatever it is. Just put a little bit away, and just get hard assets, because that is the thing that can save you, is having something that is not being devalued. Everything else around it is, meaning every other currency in the world. And so if you own treasuries, which is the classic argument, yeah, but you get treasuries and they're trading above inflation. Are they? Are they? What's inflation? Is inflation the 2% to 3% that they're quoting at the Fed? Or is it the expansion of liquidity and money supply, which is closer to 7% plus? That's the number I use, which is you're losing 7% of your purchasing power every year, effectively. And so if you're not making more of that on a bond, then you're getting a negative real yield, meaning that you're losing money. The money that you have in that treasury bond is melting every year, right? So that's a bad trade. A good trade is to borrow at 5% from your mortgage, whether it's, if you have a 3% mortgage, you have made out the last number of years because your house has gone up in value. I mean, again, the currency used to buy that house has gone down. Your house has gone up in value far faster than that 3%, mortgage rate, and the expansion, and that's due to the expansion of liquidity in the money supply. So that's the message. You protect yourself. Protect yourself, because whatever the timing is, Larry's right. The big print is coming. It's just a question of when and whether it's going to be catastrophic for the dollar or not. But either way, it's going to be, meaning hyperinflation. But either way, it's going to be painful for dollar holders and any other currency in the world. That's my take on
it. Do you see, in saying all that, do you see us going to 50-year, 100-year bonds and having that eventually? I mean, do you think we have negative interest rates at some point? I know it's been done around the world a little bit. I don't know if we can do it with the reserve currency or not. I don't know. Well, that's above my pay grade. But do you see that us eventually having to do that 5 years down the line, 20 years down the line, where this becomes a thing?
it. I think the years of ZERP are over. Even if the Fed lowers rates to, 0% or 25 basis points, you're not going to see the long bond go down to 25 basis points. It's just not going to happen. You mean investors are savvy to the fact that there's going to be inflation on the back end of that.
Yeah.
So whether or not the Fed wants to, the only way that they could keep those rates down, Brandon, is yield curve control, which is out there buying them themselves, which is yet another form of liquidity. Then you're everybody. That's the effective that is effectively turning Japanese, where you're using your yield curve control. You're printing your own money. You become the largest buyer of your own debt. Would they like to have a 50-year, 100-year bond? Sure. Who wants to buy that? Do you want to buy a 50-year or 100-year bond at 5%? Hell no. Hell no. Are you crazy? Think about how much duration risk is on that. Meaning the effects of a long-term structural change in inflation, the effects on a 50 or 100-year bond would be absolutely monumental. It would be monumental. It would destroy the value in that holding. So, of course not.
Yeah, I mean, I feel like there will be some who do it. I mean, you have people buying, there's negative rates, right? And then people were hey, got to do it.
Yeah, there was I think $17 trillion of negative yielding, nominal yielding, in Europe back before COVID lockdowns.
Yeah.
And so, but how were they able to do that? Why were they? Well, because their pension funds are mandated to hold that paper. So there was a requirement. So, you know,
Yeah, the free market's not doing it. Yeah. Yeah.
yeah, it's basically, I mean, it's like you know, it's like when you get a cell in Excel, and it, you're getting, you know, it's a circular reference. It's just like, it doesn't really calculate properly. That's what you're getting out there back then. You're seeing the effects of that, but you saw the effects of it through COVID. I don't think we can go back to ZERP on the interest rate curve. Of course, they could pull rates back to zero if they wanted to, and that would just be super inflationary, in my opinion. But, you know, the bond vigilantes won't allow the 10-year to go down to 5%. Not going to happen.
No.
So,
well, all of our prayers are answered, because I just saw Brian Armstrong came out and said we're raising leverage from 20x to 50x. So we're good, James. I mean, like, you want to make some money. I'll tell you right now, guys.
do not do that. Do not, like, another message. Do not,
oh boy,
not use leverage on a super volatile asset that is the collateral for that leverage, because you'll just get wiped out. You see it every single day. You see it every day. These people, you know, that's what happened again this morning. You saw Bitcoin get knocked down under 110 in literally 5 minutes, just boom, boom, boom. And it's somebody just wipes out that leverage, picks up the pieces, and makes a nice little, you know, nice little nut.
some cheap sats. Yeah. And so I set that up because I wanted to chat really quickly about that. So a couple weeks ago or a month ago, that those 80,000 coins that someone liquidated, you know, and just, it feels like, you know, people are talking about this bull run, and it feels like this consolidation, like it's a great base, and that 80,000 comes in the market, it got scooped up, and we had a couple % correction, basically. I mean, people for years said, what, 80,000 comes online, or the old coins from Mount Gox come on, it's going to destroy the network, or going back.
Cycle, right?
Yeah, exactly. And it's like, well, here we go. We just had an event where 80,000 came on the market, and they just get scooped right up. So it feels like we're creating a great base right now for people, you know, around this level ish. So I guess the people that are really worried and you know, getting bearish of, hey, where's the bull run? What's going to happen? I mean, what can you say to those people, I guess, of just maybe some evidence of the contrary, of like, hey, like, we're building something. Like you said, we talked about the summer things happening. We had that anecdote of the 80,000, not even an anecdote. I mean, that was a big thing. And then it just we kept on chugging. So, you know, where do you see things coming, you know, with the coming months, you know, possible rate cuts, injecting liquidity? We've kind of talked around all these things, but what do you see for this cycle bull run? I know people are getting very antsy right now.
First principles. Do you think that, okay, liquidity has been expanding, number one, right? And Bitcoin has not kept up with liquidity expansion recently. So that's number one. Bitcoin typically lags it by 10 or 12 weeks, right? So it's still been expanding, and Bitcoin has been lagging it, and it lags by 10 or 12 weeks on top of the lag. Okay. Mm-hmm. So there's two things that can happen. First principles, because Bitcoin follows liquidity very closely. So does gold. So does the stock market. These are all assets that expand and contract with the money supply. So do you believe that the money supply is going to expand or contract in the near future? Well, looking at the markets and looking at the jitters and looking at the Fed funds, the Fed funds rate, and Fed funds futures, listening to the Fed, seeing the employment data, seeing the different data that says that we're going to need to tap the brakes here, on or actually hit the gas pedal here a little bit, pull our foot off the brake, and expand liquidity. Hearing all that, it sounds like we're going to expand liquidity going into the near future. The only question is, do we hit a hard downturn first? Well, I don't think we're going to. I think we're going to ease up on the brakes here, and we're going to continue to expand liquidity. So that means that there are two things that could happen. Either liquidity could contract to meet where Bitcoin is, and gold, or actually gold's run quite a bit, but liquidity can either contract to meet Bitcoin, or Bitcoin can catch up to that continually expanding liquidity. Now, I happen to believe that liquidity will expand ad infinitum, forever. It will have drawdowns, but it will, the line is up and to the right. It's going to continue to be up and to the right. The other thing is that Bitcoin typically lags gold and gold's move. We've seen it in a number of other events. And so Bitcoin's been lagging gold recently, and it will catch back up, in my opinion. So my strong opinion is that even if we do have a drawdown, it's just temporary. Even if we do draw down to 100,000 or 90 something thousand dollars, it's just temporary, in my opinion. And it's a buying opportunity, in my opinion. And again, we would be buying with my hedge fund, with the Bitcoin Opportunity Fund, we would be buying higher beta to Bitcoin opportunities, meaning opportunities that will outpace Bitcoin on the upside. So, and that's what we're looking for right now. And we've actually been layering some in over the last few days. So that's where we are.
Yeah, I know. Yeah, I mean, you've talked about this. I know Larry's talked about this over time. That gold tends to lead and snuff a lot of these things out. And I would imagine because it's more, but maybe less concentrated. Is that a good way to say it? Maybe like, again, like it's just like in central banks, like there's a lot of wealthy families that have it. So that's maybe why gold leads to a degree first, and then Bitcoin rips usually and kind of catches up to that and blows past it. So I know you guys have talked about that for a while. Going off and segueing a little bit, what are your thoughts on just like Saylor, the treasury companies, kind of like what's happening there? I would love for you to touch on that world and just kind of what you're seeing there. And again, you just mentioned the Bitcoin Opportunity Fund, obviously, but just, what do you see when you kind of look across the horizon? Well, we've obviously had a ton of Bitcoin treasury announcements the last year, right? I mean, when you kind of look out across everything, what do you kind of make of all of it?
Look, I'm very optimistic about that space still. We've had a sharp contraction and a reset of what's called the MNAV in a number of these companies. And so there was a little bit of euphoria, a rush of capital into them right off the bat in May, June, July. And that's kind of backed off a little bit as Bitcoin continues to kind of grind sideways. And then you've got the leader of all of them, Michael Saylor, and Strategy. They've contracted. Their MNAV has contracted to 1.5 here, and the reason for that is that he's been tapping the ATM, meaning selling common stock to turn around and buy Bitcoin with it. And he's been doing a lot of things, that I think are really smart, and we think that they are poised to be the biggest Bitcoin bank in the world. So really important, but we've seen a contraction here, and that's okay. I think that's normal, but I think it's also an opportunity long term. Now, that said, we like to hone in on the MNAV, and it's the simplest calculation of all these companies, and we like to do that because it gives us a tangible book value for the underlying shares, right? So so when it also gives you a pretty strong base to compare to traditional banks. So looking at these, we think that most of them are going to fall in the 1.5 to 2.5 MNAV calculation. Most of them will gravitate towards that 1.25, 1.5. We think that there will be premium for some other ones who have strong leadership, strong access to financial products and in the capital markets, and an strong underlying business that can help fuel purchases. Those all to us, they are eligible for a higher MNAV, And so over time, we do believe that a lot of them are going to contract into that, but it's going to take time. There's still plenty of runway here, but there's a difference between the different companies. Some companies actually have underlying businesses. Some of them really don't. They're just straight Bitcoin treasury trying to arbitrage capital markets by borrowing fiat to buy Bitcoin, which I think is a good play. It's just a question of how many companies can make that run before the demand, the appetite for that dries up. That's the question. So I still think we have plenty of runway there. There's so much to learn about Bitcoin in the institutional space still, that there's going to be more capital there. So again, we like the space. We do not invest in every single one. We are actually pretty we are pretty selective. But Brandon, we get because we're a hedge fund, we get the opportunity to buy in the private markets before these things come public. We sign all the non-disclosures and all that, and we agree to buy at a certain point at a certain time in the future. So we take certain risks for that, but we get it close to the one MNAV rather than paying 2, 3, 4, 5 times for them in the market. So it's a little bit different for us. We have that advantage as a hedge fund, but that I say us, but it's really for our LPs, our investors have that advantage.
Yeah. So I wanted to get your thoughts on we talked about government a bit here, but I want to get your thoughts just briefly on 2 government issues, one here and then one across the pond. Obviously the EU, they're trying to roll out the CBDC, they're, whatever their whatever they got going on, they're trying to freeze their citizens' assets, bail them in. I would love your thought on just what's going on over there, potential, red herrings or canary in a coal mine or, what have you. And also here in our country, we've got government now owning 10% of Intel. I would love your thoughts on just, some of these big developments, I guess, or we could call them really over the last couple of weeks, last few months.
Yeah. So hitting on, first of all, the government owning Intel. I mean, I don't really love the government owning the public companies. It just doesn't make sense to me. I mean, I'd like Congress to get out of the business of owning stocks, I mean, but having the Congress, having senators and congressmen go into their seats with $1,000 net worth and come out with hundreds of millions of dollars worth of net worth. It's just absolutely abysmal. It's ridiculous. I mean, the insider dealing, insider trading it's shameful. They have no shame though. They don't care. So that to me is the bigger issue, is to get them out of trading. I mean, I don't see the U.S. government buying 10, 20, 30% of all these companies. It just doesn't make sense to me. So I also don't want to see it. That's like, that's the first step toward a government that we don't want.
And not good. Yeah.
Not good. So I disagree with that decision. So CBDCs, for those who don't know, central bank digital currencies are currencies that are on the blockchain that give full and total access to the provider, meaning the U.S. to the government, not the U.S., the European government. And so the EU can determine how, when, how much, what for you can use your money. So meaning that they could do it down to the transaction. So if they want to establish a 15-minute city, if they have CBDCs, it's really easy to do. What's a 15-minute city? It means you have basically are effectively walled in to 15 minutes from your home in any direction, meaning that if you want to leave that 15-minute radius, then you're going to be penalized. It's going to be a special thing for you to leave that 15-minute radius. So you have to shop at your local grocery store. You have to travel to your local. You can't go take vacations whenever you want. And if you try to, because of the central bank digital currency, they can say, well, you can't use that money in Greece today. You live in Germany. You've been to Greece twice already this year. You can't go 3 times. And they could just say your money's not good here, and you can't buy the plane ticket. You can't buy gas. You can't nope, you're not allowed to. You've eaten too much meat. You had beef twice this quarter. So that's it. You can't have any more beef until next year, and you can't buy it. And so they'll start creating some sort of, you do that, and you're going to have unrest. You're going to have dissatisfaction at the consumer level, and you're going to start a barter industry. And what do you think they're going to do? They're going to want to try to get access to things like Bitcoin, so they can buy things they want without having, their money tied up. But they'll stop the rails to that too. So it's concerning. It's concerning. And if I were a European, I would be, fighting it every single day and calling whoever is my representative to rail against it because it's insidious and it's scary. And it's exactly what Elizabeth Warren wants. She's not going to get it. That's what she wants. Complete and utter total control. Not going to happen. So I believe that the U.S. they're already, putting forth legislation that prevents that. So hopefully some of the rest of the Western world wakes up to it. It's not good in China. If they don't like who you're hanging out with, your money's turned off. They're like, hey, warning, you're within 100 feet of a known social offender, someone who has spoken out negatively on social media. Your money's no good in this area. You have to leave or get away from that person. It's wild and really scary.
Yeah, it's interesting. I was just talking to, like I told you offline, Brian Mancata, and I know he was over at the conference in Asia, the Bitcoin conference, and he was just saying that one of the themes was not your keys, not your drones, and it wasn't so much allocation anymore; it is location, and that was the importance of people, right, and tracking human movement, and you can see where this is going very quickly. Of, like you said, 15-minute cities, all that's the end game for everything, really, at the end of the day. And
total control.
Money's the tool. Total control.
Total
exactly.
Control, plug you in, make you work, let them have their.
Yep.
I mean, it's literally we used to laugh. And it's not funny anymore. We used to laugh about the world becoming the Hunger Games. It's literally what they're looking for. They're like looking to create a capital and have billions of slaves, and people are sleepwalking into it. They got to wake up a little bit here. But the corners are woken up, and I think a lot of Americans have woken up, thank God. And, really Elon buying Twitter was a big deal, because otherwise mainstream media controlled by, political forces, it's an ugly thing. You want to be able to have conversations. There's a lot of, misinformation on Twitter. We can't, of course, that you've got to admit that, but it's not a relentless, mainstream message that they're trying to get you to swallow. You can at least get some sort of balanced view if you look for it.
Yeah. So well said.
But that's not really my lane. I am happy that we have it. But I'm more concerned with people understanding that CBDCs are just, they're evil, and fight against them. Tell your congressman, tell your senator. And if you're in Australia, Canada, and the UK, if I were you, I would be telling them that's not something you want.
It could not be more immoral. Just having no privacy, no property rights, no nothing, no ownership of your time and energy. It's wild world. Community is the number one most important thing in a survival situation. And newsflash, you're human, so you're in a survival situation. October 10th through the 13th is your island retreat. Camp Nakamoto, brought to you by Mass Adoption. I will be speaking there. Nellie Brunel, Mark Moss, Larry Lepard, David Foley, James Lavish, BJ Dichter, Luke Broyles, Michelle Weekly, and many more will be there to have fun. Lots of games, activities, Cattleman's Feast, crab bakes. There's going to be everything you can imagine in this beautiful part of northern New Hampshire. We look forward to seeing you there for 15% off tickets. Gentile 15, Gentile 15, Gentile 15. There's only a couple dozen remaining out of the 100 plus that were available, so get them now. We look forward to seeing you in October. So the thesis hasn't changed. This whole talk, your thesis hasn't changed. Stay the course, like you said. I want you to set the scene here for the future, and not a time, but maybe the resting place. So where I'm getting at is the total market cap of Bitcoin, the total addressable market. Where do you think the end game is? And it could be 10 years from now, 100 years from now, 1,000 years from now. Do you think hey, Jeff Booth has it. It's got to account for every single dollar in the system, 900 to 1 quadrillion in today's dollars, or is it Jack Muller's? That's 1/2 of every trade. It's going to be 450 trillion. Is it multiples of that, like a Peter Dunworth? Like where is it below that? Where do you see when you say, hey, what's Bitcoin's end game? Just to paint a picture for the average person who's trying to wonder again, like, am I late? Am I, when you touched on this a little bit, but I love just your overall macro, like this is the end game in my eyes.
The hope aligned with Jeff Booth is that Bitcoin becomes the basis for everything, because then it protects you. Like you said, it protects every individual and their time from being usurped, from being stolen from them through relentless inflation or control. That's the hope. How long that takes, God knows. Like you talked about. I can see a world where Bitcoin gets to $200 trillion in the, relatively near future. I mean, I'm not talking 100 years,
Right.
far less than that. I mean, I would expect Bitcoin to be in the 20 to 50 million, 20 to 50 trillion dollar range in the 2030s, somewhere in there. So, and that's a very large move from here, so how long does it take to get to the base of everything? I don't know, but that's the hope. So I don't really have a timeline there, Brandon, and that's the direction I hope the world goes, instead of the other one, which is total control, relentless, you know, um, stealing of your hard work, your energy, and your purchasing power. I hope it's the other way.
Well, it's a beautiful way to wrap all this up with some hope at the end, the final resting place, hopefully. And it only happens with people like you sharing your time, coming on, doing things like this and educating people. So I want to thank you, brother. James, please tell me about Bitcoin Opportunity Fund. We mentioned that a little bit here, and the informationist newsletter, and just the work you're doing there. I'd love for people to know what's going on there and where you can be found.
Yeah, so the Bitcoin Opportunity Fund, we just launched Fund 2, and it's going very well, and we're happy, we're pleased with our performance there, but it's still open, so it's a different fund than Fund 1. Fund 1 is closed. This one is evergreen. We're going to keep it open for investors to keep coming in. We've already raised about 20% of our goal, but we're investing the same way we did in Fund 1, which is primarily in, it's a hedge fund. And so we invest in the Bitcoin space, and we're on a Bitcoin standard. So we don't hold US dollars, except for very short-term needs, but we keep our money in Bitcoin, and we weigh every single opportunity against that. We do some venture stuff, but we do anything that's private, public, early stage, late stage, whatever we think has a strong chance of giving a better risk adjusted return for the investor than just holding Bitcoin. And that said, we primarily focus on more mature companies. We like to say real companies with real revenues and real profits. And so, there's just a lot of speculative stuff out there that we avoid most of the speculative stuff. And obviously we've been investing in Bitcoin treasury companies selectively. So, but if you want information about that and you're an accredited investor, just go to bitcoinopportunity.fund. Give us your information. We'll be happy to jump on a call and talk through whether or not it would be appropriate for you. And then, of course, my newsletter, I'm still writing that. I love it. It's called The Informationist. It's on Substack. It's just at jameslavish.com. And, that I take one subject that's typically a complicated financial subject and simplify it for people each week. So, and that's been great. Love doing that. So, but it's great to be here, and I appreciate you having me on, Brandon. I can't, thank you enough, and I look forward to the next time.
Same, brother. And I will link to all those. Obviously, I know the whole team, whole Bitcoin Opportunity Fund team, incredible team there. And then the information newsletter is awesome as well. I get that, and it's got it for years, and it's an incredible newsletter. So I appreciate it, brother. Thank you so much.
Awesome. See you.
If you like that episode, then you're going to love the playlist we put together for you with our most recent podcast with the top Bitcoiners, sound money, liberty advocates in the world. Go check those out here. We'll see you inside. You're going to love them.